We're talking now about the mining sector and the recent declines that we've seen in some of the base metals. We're hearing a lot about what's still going on in China with the lack of demand and whether or not this is actually precipitating this drop in some of the base metal markets that we've seen recently. John Meyer joins us now from SP Angel here in the studio. John, good to have you back in. First of all, this drop that we've seen in some of the metals prices, how much of it is still to do with the fact that we're not seeing the demand come through yet from China, which still appears to be dancing around this idea that they've got to be locking down because of COVID?
Well, there's a lot of speculation in the copper market, as there are in all metals markets. And yes, there's this cat and mouse game going on because China is locking down and not locking down and opening up. And in the meantime, factories are still working. The workers they take their bedrolls into the factories, they carry on going. But of course, it's not necessarily full scale, 100% output. So yes, there is some loss of productivity, there is some loss of consumption. And of course, consumers can't buy things very easily when they're locked down. We get news today that the east coast of China has got a big lockdown, 115 million people locked in there. But the Chinese government has changed its tune to move on to a dynamic zero COVID policy. Away from
what?
Well, I think it gives the local authorities greater flexibility and leeway to perhaps restrict COVID in certain areas whilst not locking down certain whole cities. So I think we're going to see more flexibility coming in here. We're also seeing Hong Kong, I think, is more of a test case. They've got over 2,000 COVID cases recorded in Hong Kong at the moment, but they're not completely locked down. So they're looking at how they manage that. Also at Macau, the casino island, the casinos are still open, but the hospitals are full. They have one main hospital and they have a second field hospital that's been built. I think they're at capacity, 600 extra healthcare workers, but the casinos are still going.
So what about the look at metals prices? You mentioned copper. Let's bring up a chart for copper just to show us where it is in the grand scheme of things. Right in the middle here is that drop that we saw down March 2020, the COVID lows that we saw. Not too far away from 4-year lows, which is this solid line down here. And you can see quite clearly on the right-hand side of the chart the pullback that we've had. How much of that do you think is China-induced? And how much of it is, do you think, markets anticipating a recession? Because in recessionary times, metals markets do not perform well.
Yeah, copper at $10,000 a tonne was quite a big price and was lifted by the electrification of wind farms and electric vehicles and all that. And so demand for copper is still very strong. But of course, with these COVID lockdowns, manufacturing activity is lower. People are concerned that the Western world is slowing down as interest rates rise. Let's not forget that the US dollar is higher. So when the US dollar goes up, metals naturally come down in local currencies. Or sorry, they stay high in local currencies, but they come down in the US dollar. So yes, there's a reduced demand environment, a bit more new copper supply coming into the market, not a lot more. And for those speculative hedge funds out there, they see the risk as on the downside, quite a lot of negative news flow at the moment, and that just pulls prices down. But this is a long, long way off game over and massive recession. I think if anything, we probably look forward to a mild recession or maybe even a short, sharp shock. But probably we're still looking for interest rates to perhaps come down again next year as policymakers re-stimulate.
This is what the cynics say, isn't it? They're trying to put up as much as they can this year on interest rates, just the excuse to bring it down next year. With all this in mind, I was reading recently that there are some people in the market that believe that copper is going to go into surplus next year. In other words, there's going to be far too much or more produced than there is demand coming through. Do you subscribe to that idea?
Yes, there is more copper coming into the market. I think we are still going to see increased demand. The Chinese are injecting $45 billion worth of new infrastructure projects into the economy. And they're going to use a hybrid banking finance model for that. So I don't think it's going to come in immediately. We know Western economies are also going to look at re-stimulating infrastructure to some degree, nobody's rushing it because nobody wants to drive inflation. So weirdly enough, the more that commodities come down, the lesser the risk of high inflation is, because manufacturers then don't have such an excuse to put up prices. Because we know lots of businesses were hiking prices, partly to pay for COVID, partly because they could. And so they're just the policymakers taking the heat out of the market as much as they can. And China has said that's actively what they're doing with the way that they're financing infrastructure going forwards.
With this drop of around about 30% in the price of copper, and of course I guess the same really goes in terms of the drop we've seen recently for zinc and aluminium and other base metals, does this take many producers out of the market? In other words, are their cash costs too high to bear this sort of drop in the market?
It's going to be quite painful for the higher cost producers because they've got underlying rising costs, rising diesel prices, energy prices, rising reagent prices. So all those costs they've got in there. Let's not forget labor, because everybody wants a pay rise. And why not? A lot of this stuff, I think there was a lot of pent-up inflation in the market back in 2019. Not a lot of pay rises were necessarily given during the COVID period. And now there's some catching up to do. And I think there's a lot of that going on in the market. And I don't disagree with it. But it means that as metals prices fall and costs come up, margins get squeezed. So yes, there'll be a few casualties there.
Where we are at the moment, 77.91 on LME copper, we have in the past talked about this idea that we're going to see 10,000 plus. It did manage to reach that. Do you see that sort of area of pricing coming back anytime in the near future, especially not perhaps maybe if we do get that surplus next year? It's going to take a while, isn't it, before we get back up to those highs?
I absolutely see the price building back up again towards 10,000, because the need for more wind farms, the need for cabling, the need to put in all the charging points for electric vehicles is coming at us. It's growing, and copper is still the key commodity for that. Yes, there are other technologies. We use aluminium on overhead power lines. People talk about using aluminium composites and graphene composites, but they're a long way off, and still copper is the best solution. And it's very hard to replace that with building regulations and all the regulations that involve these things. So copper will, for me, it will rebuild. There's just not enough new copper coming into the market. And going forwards on a longer term basis, there are nowhere near enough new copper mines.
Yeah, copper down but not out.
Certainly not out, yeah.
John, thanks so much indeed. John Meyer from SP Angel with a view of the markets as things stand as we look into the rest of this month of July. And of course, we see COVID numbers building here as we get used to dealing with this new way of dealing with the pandemic. But obviously in China and Hong Kong, there's still some problems as they find it difficult to get people back to work. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.